Hey everyone, welcome back to All Things Home Loans, Credit, and Real Estate. I am your host, Deb, the Mortgage Queen. So let's start learning. Today we're going to talk about everything you should never do during a mortgage loan. That's probably the most frustrating part of our jobs is the things we can't control. Like I can be a constant nag and I can constantly tell people how to live their life during the time of us processing a loan. But whether people listen, that's a whole other story. And I swear some people wake up in the morning and think, I wonder what I could do today to destroy my home loan. I wonder what curveball I could throw Deb and see if she can recover from it. I swear that's people's like mantra in their life. But anyways, we're going to tackle, I don't know, 10 to 15 things that go on during the loan process that from experience, I can tell you from experience, we've definitely had to zig and zag through. I would dare say some people live in the world of it's really not that big of a deal, figure it out. And some people are like, well, I guess if it doesn't work out, it doesn't work out. And then straight up don't have a clue that some decisions or choices that are made could deny your loan. I want to start out with a big piece of this is communication. All of the things that go on during a mortgage loan that maybe needs to change on credit, jobs, any of that stuff, it's not that you can't do some of the things that you want to do. It's just the communication piece of it. If you want to change anything, just tell us what you're wanting to do and let's guide you as to whether or not that's going to kill your deal or not. So let's start with the change of jobs. When we qualify a borrower, obviously the biggest thing that we want to qualify off of is the ability to repay the loan, which means I have a job and I have income coming from that job and I can document the income coming from that job. If anything changes on that, that could be a potential issue. Now, I've had clients that have called and said, hey, I've got an opportunity that I'm going to be able to change my job into this. I'm going to be paid $2 extra an hour and nothing changes. They're just a 40-hour work week. They're still punching a time clock, and it's just a better situation for them. In most cases, that doesn't matter. The big piece of it is I've gone from an hourly rate to an hourly plus commission, an hourly plus tips, an hour plus bonus. I gotta have a history of that. If I go from an hourly rate to just a salary on its own or salary to hourly, that's okay. It's just we've got to be able to be full time. So changing jobs is definitely not a deal killer. Absolutely not a deal killer, but it is an absolute mandatory communication piece to us as the lender. Um, the change of pay structure, how much time you have from one job to the other. If you're done on a Friday and you're starting the following Monday, okay, all right. If the income pieces work, the income pieces work. I would dare say that most of the job changes people do are going to better their situation. There have been plenty of times that we've gone from a base or a salary to some sort of a variable income. That's when we get in trouble. So communication, remember communication. The word of the day today is communication. And I really think like this is like way out there because I'm no therapist, but communication goes a long way in every aspect of your life. Go figure. Communicate with your lender on changes in your life, communicate with your spouse. The word communication, man, I think that's a pretty good gig, the word communication. Anyways, case side note. Credit. That's the next thing. Just because I pulled your credit report today doesn't mean we're not aware of changes during the loan process that you make to your credit. We get notified when you have a new credit inquiry as long as your loan is still open and active at my office. Any new credit line of credit inquiry actually results in me saying, what did you do? And if nothing was opened, you went to a store and they gave you 15% off just to apply for the card and nothing was opened, okay, we still have to deal with that. If you apply for a new credit card and you don't have the statement yet, we still have to deal with that. We still have to prove that you don't have a balance on that. We still have to prove that you don't have a monthly payment on that. It's not as easy as, nope, I just don't have a monthly payment, don't worry about it. No, we don't get to just not worry about it. We have to take care of that part. That is very hard for people to understand, that any new lines of credit will affect your debt-to-income ratio. It will affect the process. Simply stated, you open a new credit card, you don't have a statement, you don't have an online profile, there's no way for us to prove whether you've got a balance or not. Therefore, we don't know if we have a monthly payment that's going to cause us issues with our debt-to-income ratio. Just don't open the card. It really is not that hard. For the 30 to 60 day window of time, depending on how long it takes for you to find a house, just don't open a new credit card. I mean, it really could be that simple. The next thing is going to be like installment loans, car loans, four-wheelers, boats, razors, side-by-sides, anything that you can think of. If you have to get a new loan for an installment loan of car or anything like that, please, what's the word of the day? Communicate. Yes. Because I qualify you off of a certain debt list. And if you needed to go buy that car, then just call me. Hey, I've got a new car payment. It's going to be $550. This is the terms of it. Are we going to be okay? I plop that in our system. Da, 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 da. Yep, you're going to be okay. Go ahead and buy your car. Hey, give me all the paperwork on that as you go so I can be able to document, so I have the ability to document all that stuff. Okay, no problem. Wow, go crazy and just realize that just solved a lot of problems that we wouldn't have known until maybe the end, which would have just slowed down closing. So not buying a car is really probably the first point to please don't do it. But if you have to, communicate. If your communication is my monthly payment is going to be $550 and I'm like, no, you're not, you can't handle that debt ratio. It's not going to be able to work in your debt ratio. So house or car, house or car, house or car, which one do you want? And you have to make that decision. I myself think, wow, if you just wait 2 or 3 weeks before we close the loan, and then a few days after you close on the loan, if you go get a new car, I no longer own you. You have the ability to do those things. I don't have control of any of that. Just be smart financially. What's the word of the day? Communicate. Oh, yes. I feel like we're on Sesame Street. Ha, ha, ha. Word of the day. Communicate. What was that, Count Dracula? I guess that was probably more of like counting, not really word of the day. But anyway, side note there. Um, One of the other things is going to be paying off debt. Everybody gets so excited, and this is the thing that everybody has to remember is, all right, we have you pre-qualified to buy this house. This is the one that you want. In order to qualify there, we have to pay off that credit card. We have to pay off that car loan. We have to pay off. We have to pay off. Those are conversations that happen. It absolutely does happen. When that does happen, don't just go take money out of savings and pay it off. We have to paper trail all of that. The best thing for us to do is just list that debt at the time of closing being paid off, and all you're doing is bringing the extra money to the closing table. Then it's just documented. It's all taken care of there. So let's say your down payment requirement is 10 grand and we have a $5,000 car that you have to pay off in order to qualify. Okay, when you go to the closing table, it's going to show I am bringing in $15,000 as the borrower because 10,000 of it is my down payment, 5,000 of it is getting that car paid off. Does that make sense? So you don't want to just go run and pay off a bunch of debt. The next thing you don't want to do is pay off old collection accounts. That's one thing that everybody gets excited about is, oh my gosh, I didn't want that on my credit, and oh, the damage, da, 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 and I don't want to have that on my credit report, and I'm ashamed, and that should have already been gone, and why isn't it gone, and the whole argument there. Don't just go paying things off. If you've got a collection account that's been there for 5 years and it hasn't reported for 8 months, and then all of a sudden you go pay it off to zero, the credit score hates new activity on negative credit lines. So you might lose a credit score position by paying off that collection account and having it report. Just pause. If we need to pay it off, what we'll do? We'll pay it at the time of closing. Yes, yes, we can pay it at the time of closing. It is definitely guaranteed that it is easier to take care of that kind of stuff at closing by documenting and bringing in more money at closing than it is for us to paper trail that throughout the course of the time. Obviously, there are some things that we do need to deal with. All right, fine, we have a collection account that's bringing our credit score down. Okay, well, let's get that paid off. Let's fix that, and then we can update the credit report. And obviously, there's paths that we can go down that may have to be gone down just for the simple fact of being able to get the score where it needs to go. But just to go willy-nilly, paying off debt, don't do it. It's not something that you want to do. The next thing we want to talk about is moving money around. Oh, it is in the mortgage industry. You are guilty till proven innocent. We've like gonna pound this into your head. Proven guilty till, or you are guilty until proven innocent. Straight up what it is. Everything you do could be some sort of shady something. We have to dot every I 15 times and cross every T 12. That's just how it is. I feel like, I think that's a little exaggerated, but that's what it feels like. But when you start moving money around, and I want to use myself as an example, I do most of my banking at Bank of Commerce. They're one of our local banks here. But I have 4 other banks that I deal with, and they all have different purposes. This one over here, I have lined up for all of my bills to just come out of, like my utility bills and things like that. I have a direct deposit that goes into it. The money just comes in, money goes out. I don't have to worry about it. I have this other one over here that I just stash money in that I can't touch it. I just leave it there. I have to actually physically go to the bank to get that money out. I don't have any debit card. I have no checks. I have nothing. I have the ability to go to the bank and physically get the money out. So it's my nest egg of documented money that just sits there. And then I have 3 or 4 different accounts that I am tied to. Well, I guess I'm not necessarily tied to, but I take care of some of the business stuff that my husband's affiliated with. And with that, if I move money from my personal account in Bank of Commerce to my business account in Bank of Commerce, and over here to this other bank account at Key Bank, and then over here to this other bank account at Citizens Community Bank, guess how many bank statements I have to have in that 30-day window of time? If I'm providing that month of bank statement for lending purposes, I have to have the Citizens statement, the Key Bank statement, and the 2 Bank of Commerce accounts, because I have to be able to document that I had the money to move from here to here to here to here, and it was really my money. So don't just move money around. I'm probably the worst person when it comes to having to document moving money, because I'm always in and out moving money around, doing all kinds of stuff. And but as soon as you start moving money in and out of different accounts, you open the doors of having to get more bank statements. If you're looking at purchasing a home, just let your money sit there. This is a misunderstanding with moving money around, is I have 10,000 in my savings account and I have 8,000 in my checking account. I have to put them in the same place. No, I don't. I've documented $18,000. I don't need savings to checking, checking to savings to have it all in one spot. I can add all of that together and I can clearly see we have enough money for closings or for closing. So don't move money around thinking it all has to be in the same account. Likewise, if I have 4 different bank accounts and I have 2,000 over here and 3,000 over there and 1,000 over here and 5,000 over here, I can have all 4 of those bank statements and I don't have to move the money around. I can just prove that that money sat in those accounts without any problem. So moving money around just gets super annoying. It's not deal killer. It's just super annoying. And the problem that we run into is, here's my bank statement from XYZ Bank, and I say, oh, there's transfers. Oh, okay. Can I have this bank statement? So then I get that bank statement. I'm like, oh, well, there's transfers. Can we have that bank statement? And you end up like piecing bank statements into me. And it's fine to an extent, but it sure is annoying on a consumer side. Like, oh my gosh, we need one more thing. Oh my gosh, we need one more thing. Oh my gosh, we need one more thing. Yeah, we do, because that one more thing opened this can of worms and this can of worms. So look at what you give us and say, oh, I wonder if there's anything in this bank statement I'm going to have to worry about. Oh, is there a random deposit? I have to verify it. Oh, did I move money from this account to that account? Maybe I better grab that bank statement. The normal consumer wouldn't probably think that way. I think that all the time, because that's the nature of my job. I'm watching those kind of things. But when it comes down to it, just be patient. Here, I gave you this bank statement. I hurry and scan it to make sure that there's nothing, or if there's anything else that we need. Okay, I need this. Hey, and by the way, when you look at that statement, if there's any of these things, go deeper. Prep for it. Be patient. You know, it's pretty simple to just be a little bit more patient with the rules that we don't put in place. Because what is my golden rule? He who has the gold makes the rules, and it ain't this chick. That's what it is. I want to make the rules. I think I'd be a terrible president, but I think it'd be cool to be the president. I could change a lot of things, but that's for another day. All right, let's talk about your down payment. I get your bank statement and it shows you have $10,000 in it for your down payment, and that money miraculously goes Black Friday shopping after Thanksgiving. Problem. When I verify that you had your down payment, that means you have to have your down payment. So when we go to closing, you have to have that money. So you can't just go spend it. That is definitely something that's happened. I kind of feel like I might need counseling after this mess, or after this recording, because like all these things that I'm reminiscing about, like, oh yikes. Anyways, the next thing to think about is co-signing for somebody. Anybody, a parent, a friend, a sibling, a child. If you co-sign for somebody, even though they have the intention of making that payment, you're still liable for paying that debt. You are. And until you are at the 12-month mark of proving that that other person made that debt payment, you're liable for it, which means it goes into your debt to income ratio. It doesn't matter what contracts you have. If I co-signed with my son and there was a contract that says, I promise I will always make this payment, I, as a mom, am still legally obligated to make that payment. I'm still liable for it if he doesn't make the payment. Therefore, little contract doesn't matter. The rule comes down to, all right, well, we clearly got a history of 12 months of payments being made by so-and-so. Probably pretty likely they're going to continue that, so we can remove that out of your debt to income ratio. Rule of thumb, just don't co-sign with somebody if you're planning on buying a house in the next 12 months and you can't handle that debt into your debt to income ratio, because we can't count their income and we just count the debt against you. So that's definitely not something that you want to do. On the credit side of things, we don't want to dispute accounts. There's this misunderstanding that if we dispute accounts, that they're just going to miraculously go off our credit. No, what happens is in a dispute of the account situation, it actually pulls it out of the algorithm of the credit report. So the scores don't see it, our automated systems don't see it, therefore it's a problem. And if you have an active dispute on your credit report and we have to go FHA, it is a manual downgrade. We automatically have to change that from an actual approved loan to a manual underwrite, which once again is fine, except for now we are restricted on debt to income ratio, we're restricted on what we have to have for credit scores, we're restricted on what we have for the ability for qualification. You just disputed accounts. If it's something that is truly not yours, we need to tackle that just a little bit differently. On the disputed account part of it, if you do have a disputed account and we pull a credit report, be prepared that we have to pull that dispute off, depending on where those credit scores are at. It could very well be that we have to pull that dispute off, and it'll damage those scores to pull that dispute off, because like I told you, it's removing it out of the algorithm. The credit score isn't really seeing a disputed account until that's resolved. Make your payments on time. I will never forget our idiot letter. That's what we called it, and I'm sorry, but that's what we called it, was an idiot letter that was required in our office to be signed with a pen. It wasn't electronically signed. It was with a pen, and it was 3 sentences. I will not quit my job. I will not get any new lines of credit, and I will make all my monthly payments on time. And what's really sad is the reason why we had that idiot letter is because we had so many people stop making their payments. We had so many people just quit jobs. Why? You're approved for a loan. That means we have to verify all these things stay the same throughout your loan process. What in the world are you thinking with this? My favorite is the mortgage thing. When we do a refinance, everybody just thinks, oh, I'm just going to pay off that mortgage. I don't have to make the mortgage payment. Yeah, you do. Until the day it's funded. You have to actually pay that mortgage payment, pay your car payment, pay your credit card payments, pay your bills. That's what it is. Don't miss payments. That will kill your credit scores. It is just not a good thing to miss payment. Vacations are something else that come up. If you are going under contract to buy a home and you have a family vacation planned, communicate. Oh my gosh, there's that word today. Communicate. Tell us. If you're closing the 25th and you're scheduled to go out of town on the 24th, maybe we should move your closing, because that was not going to work. Or maybe we're scheduled to close on the 25th and you're leaving town on the 25th. Great. Let's maybe close the day early so that you don't have the stress of all of that in one place. Going on a family vacation is not that big of a deal until you rack up your credit card getting there. You miss a closing date because you forgot to tell us all that you were going on vacation. Vacations are wonderful. Just don't do it when you're trying to buy a house, or at least communicate that you're going to be going on vacation. That is a huge, huge thing. Let's talk about trigger leads. This is something that I cannot wait until it passes completely through. I do not care that people who are in our industry feel like the way that they can get business is by buying the list of people who have had their credit report pulled and then just bug the crap out of them trying to solicit their business. I personally, just do social media posts. I talk to my past clients and ask them for referrals. I talk to real estate agents and see where I can help them. Friends and family, hey, I'm in the mortgage industry. How can I help you? I personally do not have to do the shady thing of buying a list of people who pulled their credit report so I can call them every 5 minutes and ask them if I can beat their current loan. Happens all the time. It drives me absolutely crazy. And the highest borrower I ever got with trigger leads is 127 phone calls in less than 24 hours. 127 phone calls in less than 24 hours. Think about what you do during the day. If you are working full time and your phone ding, 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 ding. Oh, anyways, So trigger leads really quick, and there's a whole recording on this already, but trigger leads are essentially this. I pull a credit report in a mortgage model that is given from the credit bureaus. Keep in mind, the credit bureaus sell the fact that you had your credit report pulled. Another company can buy from the credit bureaus the list of people who had their credit report pulled. Therefore, they're on their call saying, "Hey, Susie, I hear you. I see you're shopping for a mortgage loan. I would love to have an opportunity to help you." Okay, that's maybe not shady. What gets shady, and I've seen it quite often, is, "Hey, I have a couple of questions about the mortgage loan you just applied for. Will you give me a quick call?" So here we go. The person makes a phone call thinking that they're talking to, me as the lender, and all the while they're talking to another person, and it got him in the door of having that conversation. Trigger leads are so shady and so ridiculous, absolutely ridiculous. And there is laws passing that it's going to be illegal for that to happen, to be able to purchase those. Shame on the credit bureaus. I'm sorry, but shame on the credit bureaus for looking at the opportunity to sell the fact that a credit report was pulled to make more money to the highest bidder. I just think it's absolutely shady, and I don't understand how it even got okayed in the first place. Absolutely ridiculous. And if this doesn't go through the Senate and the House and get all approved, and everybody has to sign all this stuff, and it like somehow gets shut down, I don't think it's going to be that case, because I think it is actually written into law now. But if it for some reason gets shut down, I think as consumers, I would just task you with reaching out to your congressman and ask them to please stop it, because you have the right to go shopping for a home loan, but you do not need to be harassed. You did not give permission for your information to be sold. And if you did, it's in fine print so many places. I think we should put a class action lawsuit. Honestly, this is me going off on a tangent for a second. What if we put a class action lawsuit against the credit bureaus who sold your information to prove that they actually had the rights to sell your information? Yeah, you clicked a button saying it was okay, but were you really highly educated? Man, if so many of us put together that little lawsuit, I bet it would get shut down big time by the credit bureaus, and maybe they would actually have to tighten up their belts a little bit with the crap that they do. Anyways, wow, that was a little bit of a side note. Okay, just because I have you approved, we're gonna wrap this thing up before I get on another soapbox, but just because I have you approved doesn't mean it's willy-nilly do whatever you want to do. You have to stay employed. You have to keep your bills paid. You have to make sure that you're keeping money in its current location. Don't be moving it around unless you plan on paper trailing a little bit more. And the big word of the day, say it out loud with me: communication. Let's communicate. Let us know what's going on, because we can zig and zag all day long. It's a lot easier to zig and zag when we know what we're zigging and zagging doing, rather than having us be blindsided. What I would just suggest you to do is just look at your overall picture. Do I have anything in my bank statement transactions that I need to be aware of? Do I have anything on credit I've disputed? Do I plan on changing my jobs? Do I plan on co-signing with a loan with anybody? Just do a quick little rundown of your plan going forward, and just make sure that you are communicating and letting us know what you're doing. With that, this is me off my soapbox. I definitely feel like I had a little bit of a rant today, but it was a really good one. I hope you learned something about what you shouldn't do, everything you should never do to keep your loan approved. And with that, Mortgage Queen is out. Have a good day. Thanks so much for listening. I really appreciate it. So stay tuned. We are going to learn some more next time.